Policy and Resilience, ladies and gentlemen, Professor Amir Yaron, Governor of the Bank of Israel. I don't talk without slides. So first of all, thank you for having me. This is obviously a day full of events, but it was important to be here, and I thank you for allowing us to present Israel's economy. I guess I have several messages. Israel's economy is very, very resilient, has demonstrated a lot of resiliency throughout this, and there's a lot of good things that are up Israel's alley in terms of its opportunities, but there are also challenges, and I'll try to go through these. So first thing, basically, how did we enter the 7th of October? So what you see here, we were one of the countries who contracted the least in COVID, and then we grew like maniacs, over 9% and over 6% in 21 and 22. We're about to grow just under 4% in 23. On the top right, you see very, very tight labor market, very low unemployment. At the bottom left, Israel has demonstrated, you see now a lot in the news, the issue of government debt. Israel has brought down its debt from over 100% to 60% prior to COVID. In COVID, we used the space. We went up to about 72, and 2 years later, we were down to 60. And then in inflation, we're about to enter our inflation target, which is between 1% and 3% in Q1 24. In other words, when I would talk to Jay Powell or Christine Lagarde, we were poster child. We were on a super softish landing approach. And then came this horrible day of the 7th of October. And what I've got here for you is one slide that shows the historical resiliency of Israel's economy. In red, there are many, many different military events, and you could see that we tend to grow very well after them. But you could see at the very end that the Swords of Iron War, the Swords of Iron War is just dramatically very large. We contracted minus 21% in the last quarter of 23. But then again, you see Israel's resiliency. We jumped up by 16%, and afterwards, obviously, smaller growth rate. And today, we just at 3. So you're getting a very fresh slide, a very updated slide. We just came out with a new number for the first quarter of 2025. And we have come up by 3.5%, which is a non-trivial growth rate. So 2 things about Israel's resiliency. On the left, you see credit cards. You see how much it dropped at the beginning of the war, and then very fast, we were positively surprised how fast people came back to movies, to theaters. And you could see we are up there on the trend. In the middle, you see unemployment, and you see that big spike in October 23. There are 4 colors. The gray is unemployment. The dotted gray is the way we've dealt with COVID. Basically, firms lay people off temporarily, and the government pay furloughs. The solid teal is the reserve people in the military, and the dotted teal at the top, that's when there are still missiles flying around, and people just didn't go to work. And you could see how it declined, and then it kind of went a little bit up when the intensity in Lebanon went up. This is in September, October, and since then it went down. So where are we? Instead of growing around 4%, we grew 2% in 2023. We grew 1% in 2024, but we estimate that we're going to grow about 3.5% and 4% in 25 and 26, and this is taking into account already some of the tariffs and everything like that. It puts us, as you could see in the green line there, we still have a gap relative to where we were before. I'm going to skip this. I'll just say what you're seeing in the bottom left here, okay? For example, the blue line, consumption is already higher than pre-war. Exports are coming back. GDP is climbing back up, and so is investment, but they haven't reached their pre-war level. This is the catch-up that we need to do. But the good news, we are on a climbing trajectory. What's going on here in Israel is that we have finite amount of workers. There's no Palestinians. You could see in the orange, there were about 175. That's close to zero. You could see all the reservists. And then on the far right, you see vacancies. So part of the reasons we're not growing as fast as perhaps we could have is because we have labor shortages. One very vivid example is the construction industry in Israel. So you could see we were around 365 before the war, and then it immediately dropped and slowly recovered. Most Israelis went to work. What I want to show you is the first rule of economics, self-fulfilling prophecy. When we raised the interest rate on the far right there, you could see house prices went down in Israel. But then once people realize there's less construction, everybody says prices are going to go up. If enough people say that's what's going to happen and they start purchasing, you see prices at the very end there start climbing back up. What about financial markets? The Israeli stock market on the right-hand side underperformed for a while this S&P. But since the beepers and the ceasefire in Lebanon, you could see the Israeli stock market has caught up with S&P. Here, this is something called the CDS. That's the insurance on Israeli bond. Amazingly, before the war, we were the same level as the US. You could see the blue line and the red line are touching each other. And then it went up and down. And then after the ceasefire, it kind of went down very, very far. But we are still above where we were prior to the war. And risk premia is one weight on the economy. Everything costs more, etc. What about the shekel? So what you see here is an interesting graph. You could see the blue is the shekel dollar, and the orange is kind of is what would the shekel be if it was based on NASDAQ. And you could see that they were on top of each other. Why are they on top of each other? Because when NASDAQ does well, there's more money coming to Israel. When S&P and NASDAQ do well, more institutional investors that are invested in the US rebalance the money back to Israel. But then something broke. It has to do with the uncertainty regarding the judicial changes. And then you could see once the war started, it went up all the way from 386 to 408. And kind of went down, and since then has been going on between 355 and 38. On the right-hand side, you could see these correlations were very high with the US stock market. They dropped, and more recently, they came back up. I want to say a few things about what we did at the beginning of the war, because A, they were very important, and B, as the head of the central bank, I'm quite proud of what we did. So you have to understand, the 7th of October is happening. We still don't know what's going on at nighttime. In the morning, on the 8th, in Israel, it's a Sunday. It's a working day. I have to decide whether the stock market is open and whether the banks are open, whether it's a business day. We decided to open, and that was the right decision for continuity. Monday, the FX market opens. And you saw in the previous slide, it went quite a bit. The currency weakened. We knew the currency was going to weaken, and we did the first something we've never done. We have over $200 billion of reserves. So we manage them over many, many assets. But we decided to announce pre-trading that we are going to sell up to $30 billion and provide up to $15 billion of swaps. Now, for those of you who are not in this business, we didn't say we're going to defend the currency at, let's say, 4 shekels per dollar. This is in the lingo of governors, is what I did was QEFX. We wanted that the markets function, the trade works appropriately. And that's what happened. Doing this step was extremely important because it made sure the markets function. I want to explain the philosophy. You go back to Milton Friedman, you go back to Ben Bernanke. If there is one lesson that we know from financial markets, you do not want an economic crisis to become a financial crisis. That's when things spiral down. And that's why we did this step, and it worked. It provided a lot of, basically calm both the stock market and the bond market. The middle part, so that was October 9th. October 13th, I had all the CEOs of the banks in my office. Hanan is here. And the question is, what do you do with a bunch of people who left Otef Gaza with their pajamas? They're in a state of shock. And what do you do with a whole bunch of reservists who took their military kit bag and ran to the front line? What do you do with their mortgages? What do you do with their consumer loans, with their SME loans? What we had is, and the banks in Israel are very, very well capitalized. We used that fact, and we came with a unified plan that they defer payments, mortgages for 3 months, no commission, no interest, to start to be paid maybe 12 months later. That was a very, very important targeted relief. Okay, since then, we've added the North evacuees as well. We've extended it 3 more times, and I'm glad to say 98% of those who've done that step have come back to pay in good standing. So this was very, very important. Now, I want to say one more thing that happened. So that's October 13th. October 20-something, we had the first interest rate decision, and the whole country became Keynesian on me. Every media said the governor should lower interest rate. And I said, no, we are not lowering interest rate. We are about stability. Stability, if we are selling dollars, we are not going to lower interest rate. And that was the primary function. Let me just, it's not moving. Can you? So let me say a few words about the Israeli high-tech, since this is the locomotive train of Israel, the locomotive economic train of Israel. So in one slide, you could see how important the high-tech is for Israel. Over 1/3 of taxes, over 50% of exports, large share of GDP. Israel funding for high-tech is much larger than the US. Over here, you could see it's over 6% of GDP. In the US, it's only about 1.5%. And after NASDAQ dropped, you could see it dropped in the US and it dropped in Israel. You could see on the right-hand side, the good news, after capital raised for VC money has dropped at the beginning of the war, it is slowly coming back. It is not at the level of 21 and 22, but this is true everywhere in the world. I remember you have to understand, 21 and 22 were just abnormal years in terms of VC money. I remember Ruth Porat was in my office, and now she's the CEO of Google. And I told her, look, every little 2 kids are coming in with a PowerPoint presentation and are getting frothy money. And she says, Governor, you're absolutely right, but it's not PowerPoint, it's Google Docs. So I think this is the new normal in this area, and we're doing okay. One word about Israeli high-tech. Why is it now much stronger than it was in 2001 when the dot-com went? I want to explain the resiliency of this of it. You could see that in the middle, this is a very, very well-diversified category. Everybody understands how strong we are in terms of cyber, but we're very strong in terms of medtech. That orange part that says other includes security tech, and you can be assured that there's tons of orders now to our security tech. We just can't provide all of it in one shot. And a lot of these companies have products, something they didn't have in 2001 because it was mostly at telecommunication dream companies. Just a few words. We got an unfortunate an unfortunate number last Thursday in terms of the inflation. So inflation went up to 3.6, but about 0.7 out the 1.1 number was flights. So you can imagine how important the numbers for flights have become. They are influencing Israeli inflation. And now this is the path for inflation. We're still seeing inflation going into our target in the second part of the year, but we have to be a lot more cautious now as the inflation level is now higher due to that increased level that was in the last CPI. I want to say one thing about the elephant in the room, which is the budget for the war. So what is Israel's challenge? Israel's challenge is threefold. On the one hand, we need to continue to demonstrate that we are acting responsible in terms of our fiscal budget. That means that debt to GDP does not diverge over time. That's number one, pillar number one. Pillar number two, you could see over there, we have the highest, on the right-hand side, we have the highest defense expenditures in the OECD. We have to pay for defense expenditures. And on the bottom right, you could see we have we're relatively short on civilian expenditures, and yet we have a lot of needs for infrastructure, for education. Those are the long-term challenges for Israel. So how do you manage, on the one hand, for a country with a lot of geopolitical risks, not to have debt rise too much, pay for the defense expenditure, and at the same time put the seeds for growth in terms of education and for infrastructure? So here's the picture of the war. The war cost about $250 billion shekels. That's as of now. It's about 13% of GDP. And one has to give the government credit in terms of the fiscal steps that it took in terms of the budget. It did 1% fiscal consolidation in 2024, another 1.5% of fiscal consolidation in 2025, and the outcome of this is that Israel's debt to GDP is somewhere between the orange and the yellow line. It kind of depends what will be the military expenditures that will come out at the end. So the bottom line is, as opposed to many European countries right now in which debt is rising, at least in the case of Israel, it's going to rise in 2025, but then in 2026 it's going to subside and it's not going to grow. And if we want it to come down and be on the green line, we'll have to take some more steps. But this is a very, very important message to the rating agencies and to the market, and it was very important that the budget was passed in that sense. That's the good news about the budget. I must say, what is the not so good news about the budget? There should have been more money directed to engines of growth, that is education, infrastructure, maybe taking away some disincentives for going to work for certain populations in Israel. Those are the key things for long-term growth, and the composition in the budget we could have done better, but at least we do not, as according to the Bank of Israel, we do not have debt to GDP challenging. Maybe I'll just leave you with 2 more slides and I'm done. There are long-term challenges. So the main message is we entered the war very well. The economy is showing a lot of resiliency. The high-tech is showing a lot of resiliency and a lot of promise. But we do have some long-term challenges. You could see on the left, we have a low infrastructure relative to other countries. We have high poverty rates. In the middle, GDP per labor hour means productivity is not very high overall. And in the very right is amazingly international skill levels, international tests, we don't show very well. So that's what I mean when we need to invest in education. Now, one more demographic thing that is challenging for Israel for the long run, you could see here, in orange is the Arab population. It's pretty stable in the low 20s. In gray you could see that's the ultra-Orthodox, and that's going to go up to mid-20s. But the ultra-Orthodox have very little presence in the job market, so is female Arabs. We need those two groups to enter into the job market and help Israeli economy, and we want them to do well. That means they need to have the skills, especially in a modern society. So I just summarized, we entered well. Inflation is kind of on the above the upper limit, and we will have to make sure it comes down. Risk premia has gone down since the ceasefire in Lebanon. It's still above where we were before. We expect nice growth of 3.5% and 4% in the next 2 years. And the challenges are things that need to be dealt with, and the sooner we deal with them, the better off we will be. Thank you very much.